Everybody, morning. How's it going? We are here, we are live, and welcome to the show, my magnificent monsters. Welcome back, welcome back. It's the only morning show I know of that runs entirely on taurine and some spite and sheer terror. Looking at our brokerage accounts, I want you to close your eyes for just a second now. No, seriously, close them. Imagine it's the summer of 2008. You know, you got some nice cargo shorts on. You're listening to Flow Rida, and you're blissfully unaware that the global financial system is about to detonate like a cheap firecracker in a porta potty, splattering blue crap everywhere. Anyway, oil skyrocketing towards $150 a barrel. The ECB hiking rates because they think inflation is the real enemy. And underneath the surface of all this brewing mess, a massive, unregulated credit bubble quietly springing a leak. Now, open your eyes. Does any of that sound slightly familiar to what's going on right now? It's March 2026. Oil is screaming higher. Could be heading toward $150 a barrel. Thanks to this Iran situation. The ECB threatening to hike rates because they think inflation is the real enemy. And underneath the surface, we have a massive, unregulated $1.8 trillion in private credit that's quietly springing a leak. Well, why would any of this matter to your wallets? Because according to Bank of America's top strategist, Michael Hartnett, Wall Street is currently ominously trading the 2008 analog. That's all the big guys, all the big banks, they see this. You know what? I think we've done this before. And if he's right, the next few months could wipe out those who are unprepared. But if you know where to look, this exact setup is offering a generational opportunity to buy the assets that could potentially survive the crash and thrive in a whole new world of aftermath. And today, we're talking about how to play the oil shock. At least that's what I plan on talking about. Why the private credit is the new subprime mortgage crap, and exactly which tickers maybe you should keep an eye on before the music stops. Strawberry Dreams is beautiful today. It's one of my favorite flavors right there. So let's break down the madness. Over the weekend, Zero Hedge published a piece highlighting Hartnett's latest warning, and honestly, kind of reads like a horror story for anybody holding a 60-40 portfolio. Yeah, be careful out there, as I always say. The setup is almost perfectly symmetrical to 2008. You know, it's kind of funny. I've been talking about this for a little while, right? I've been talking about how the AI stuff, the overbuilding, very similar to the dot-com era. Like, there's a lot of parallels there. And then this credit situation that's brewing under the surface, very similar to 2008. What if we smash those two crises together and have a mega crisis? Greater Depression. I didn't know how it was going to come together. I've been talking about this for a couple years. If you've been around the channel and you've heard me talk about this potential Greater Depression before, let me know in the chat right now. Like, I just want to see how many people have been paying attention. I didn't know how. I didn't know the whys. All the pieces are coming together, though. It's right here, staring us down the face right now. This setup is almost perfectly symmetrical to 2008. I mean, back then, from 2007 to 2008, like the middle of the years, you know, mid 2007, mid 07 to mid 08, Oil doubled from 70 to 140. Anybody remember that? I remember that. You used to have to walk around with like cash just to buy gas. Right now, the Iran conflict has pushed oil up over 60% this year alone. And we're staring down the barrel. I mean, people are talking about $150 crude on CNBC. If this Strait of Hormuz situation stays choked off for very long, it's going to create a supply hiccup. It's going to cause the price to go higher. In 2008, while oil was surging, we started feeling subprime tremors. Funds started freezing up. Redemptions. Banks stopped doing redemptions on their fund. I mean, if you've been watching my channel here, Blue Owl Capital, I talked about this a couple weeks ago. They stopped doing redemptions. We're seeing credit doing the same stuff, except this time, instead of using their own money, they're using our money. They've got it into your retirement account. Now, banks were quietly panicking back in 2008. Fast forward to today, we have the exact same sort of situation. This time, it's not subprime mortgages, it's private credit. Morgan Stanley and Cliffwater just gated their investors. This is the first sign. They're capping off redemptions because everybody wants their money. I want to get my money. And the banks are like, oh, wait a minute. We can't do that right now. I mean, this is the classic kind of margin call setup type of moment. And what did the European Central Bank do in July of 2008? Anybody know? On the exact day that oil peaked, they hiked rates. Hartnett calls it one of the greatest policy mistakes of all time. 74 days later, Lehman Brothers went bust, credit collapsed, the ECB had to aggressively slash rates as the world burned, and guess what? The market is currently pricing in a 75% probability that the ECB is going to be hiking rates by June of this year. Time is a flat circle, my friends, and it's made of highly explosive macroeconomic gasoline-soaked nitroglycerin. So how do we trade the apocalypse that potentially might be coming? If Hartnett's right, well, he has a specific playbook, and we need to pay attention. He says the corrections end when the safe havens lose their bid and the policymakers start panicking. His rule of thumb, markets stop panicking when policymakers start panicking. Think about it. I mean, it's not bad, right? So markets are going to panic until the policymakers panic. So if we start seeing market panic and all the policymakers are like, it's fine, it's fine, fine. It's not going to be fine. But then when they're like, oh my gosh, hair on fire, let's cut rates, let's fix it. That's probably the bottom. So at least things might be chilling out. Here's the framework, how we navigate this mess. We're looking at 3 specific buckets: the hedges, the policy panic plays, if you will, and some contrarian value. So bucket number 1, the hedges. If oil keeps ripping and credit keeps cracking, you need a defense. I mean, smart to do that. Hartnett has specific trigger points that are kind of fascinating. He says, fade oil above $100 a barrel and fade the dollar when the DXY, the Dixie, the dollar index I look at every day, goes above 100. Why? Because at those levels, the pain on Main Street becomes so unbearable that the government and the Fed are going to have to step in. But I've been speculating that maybe, just maybe, we see the dollar actually go on up to 130, 140. Could be pretty spicy. Maybe they can't intervene. Maybe their intervention does nothing, and the panic gets worse than we've ever seen before. We could be staring down the Greater Depression. Like this one could get out of control. They can't control it. And then the dream of our government controlling Jack Diddley squat in the economy, just completely vaporizes this time. So where do you put your money while you wait for a rescue, if they could even rescue anything? Long-dated treasuries, specifically 30-year treasury? If you believe that the U.S. government is going to be the stalwart of, 250 years of money printing. Hartnett says buy the 30-year yield above 5%. So you got to get above 5%. It's the ultimate recession and credit event hedge. But the ultimate hedge against all fiat currency globally is Bitcoin. I mean, like it or not, it's not a tradable thing. It's a credit default swap for fiat going absolute bananas. So pick up Bitcoin while it's not at all-time highs. Just dollar cost average. I'm not saying dump everything in there. If the U.S. government's solvency is threatened, the Fed probably going to intervene. They're probably going to drive yields down, bond prices up. So look at ETFs like TLT. It's a 20-year Treasury bond ETF. If it, right now it looks pretty sketchy, but it might start moving. The 2008 analog, if that actually plays out and credit breaks, bonds are going to aggressively outperform stocks. I mean, that's what we've seen in the past. So, bucket number 2, policy panic plays. As I said, when the pain gets too high and the Fed is forced to pivot, what comes back the fastest? What comes back the hardest? What really slams it in? Hartnett points to a fascinating contrarian play here. China. I've been talking about China may turn into one of the biggest opportunities this year. And I know. Buying Chinese equities right now feels a little bit like juggling chainsaws, but hear me out a second. China is actively targeting record deficits to stimulate their economy. Inflation is actually rising there, and they're pumping fiscal spending to counter the geopolitical chaos. If the U.S. hits a wall and global growth stalls, China's aggressive stimulus could make their equities a massive outperformer. The index things that they have, the baskets of stocks, the ETFs, actually look like they could explode higher. Broad exposure in something like FXI, that's the iShares, BlackRock's China Large Cap ETF, or even picking up some of the giants like Alibaba, BABA, or Tencent, TCEHY, maybe even Baidu, BIDU. They've been beaten down, but they're pretty flush with cash. They can make some waves in the market. Now, bucket number 3, the contrarian value type stuff. If the S&P breaks below 6,600, Hartnett says it's a buy because that's the level where the Fed starts panicking. I'm not so sure, though. I would be careful on that one. When the Fed prints money, well, you don't, it's not like bad for the economy when the Fed prints money. We tend to take everything higher. But you don't just buy the index. You buy the things that the government has to support. Trump's entire platform relies on less inflation, less war. If the economy starts breaking, the administration is going to have to pivot hard to address the cost of living and support the lower-end consumers. That means consumer discretionary stuff and small caps. If we get a ceasefire in Iran, the oil shock subsides. Tongue-tie myself. Subsides. The oil shock's going to subside as everything gets back to normal over there. Back to business as usual. Oil comes back down. Small caps probably going to rip. We've seen that setup. IWM is a way to play Russell 2000. I look at Russell every day. UWM, if you just pick up some shares, could potentially outperform. Small businesses have been crushed by high rates, inflation. Any relief on those fronts, and they start ripping. And let's not forget the energy sector itself. While Hartnett says fade oil over 100, and oil is kind of like the king of energy lately. I mean, for the last, since I've been trading basically 30, 40 years, every time people talk about energy, they're talking about oil. The company's pulling it out of the ground. They print cash. Even if you want to play the barbell type strategy, energy and staples over banks and tech, look at the big boys. Look at ExxonMobil, look at Chevron. They're kind of defensive. They pay dividends. They thrive. They tend to be pretty stable, even if they pull back a little bit. They come back over and over. The world is not weaned off of oil. And even if massive adoption of EVs happen in the next few years, we still have jets. We still have trains. We still have cargo ships. We're not making EV jets. We're not making EV cruise ships. It's just not happening yet. May never. So let's summarize this madness here. The 2008 analog is flashing bright red. The oil is spiking. Private credit's cracking. Central banks are making the exact same mistake that they made 18 years ago. But don't panic, right? Don't panic. Don't, like, if things start really coming apart, be prepared. Watch the 30-year Treasury yield. If it goes over 5%, you start locking it in with TLT. You watch the S&P 500. If it starts dropping below 6,600, you prepare to buy some dips, specifically targeting small cap IWM stuff and beating down consumer discretionary stuff. And if you need a place to hide right now, if you're just like, whoo, I want to stick my head in the sand and come back and when this is all over, XOM, CVX, consumer staples, avoid the heavy exposed banking sector, except one that's set up particularly well, though, is Bank of America. Like, we could see them rally for the next several months, if not a couple of years. Now, Gen Z might not have any jobs. They might not have any savings, but you, my magnificent monsters, can have a plan for when this actually all brews and comes together. So stay frosty, keep your stop losses tight, and let's look at some charts. Talk about some ways to make money. What do you say? Look at some predictions for today. And jump it over here. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I make predictions. Sometimes they come true. Sometimes, hard time is the hardest part of this whole thing. Like, I've been talking about this Greater Depression brewing thing, the parallels between AI and the dot-com, the credit thing in 2008. Like, people have been like, what do you mean? It's like, hopefully you're all starting to see the parallels now. It's all kind of coalescing into like this perfect storm situation where we have two major events and they're brewing together into one big potential event. The downside could be brutal. And if you look at the way 2001 happened and then 2008 happened, that was 14 years and nothing in the market. And we could potentially see twice as long. It could be like 20 years. It could be 30 years, 28 years, 30 years of the next one, if it's bad enough. So be prepared out there. I don't have a crystal ball. I just have a bag of unicorn dust. It's economical. Go Google it. Friction Labs produces it. It's, sprinkle it on the market every chance you get. And so this presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. Golly, tongue-tying myself. Including stocks, options, bonds, forex, futures, cryptos, treasuries. If you're trading those things naively, you're probably going to lose money. Like 90% of traders lose money. If you desire personal financial advice, well, there's people you can hire and consult for that. I am not any kind of certified financial advisor, so don't ask me what you should do. I'll show you what I'm doing, but my financial situation is probably different than yours. So you got to make the choices that are right for you. Just learn this stuff. Like, nobody's going to tell you how to take care of your money better than you. Most people out there just looking to get a piece of your money and make it their money. In all reality, Even I do that a little bit. So look at the last year here. K-Info. This is an auditor, public auditor, publicly posts my trades. Here we are. Beautiful. There it goes. $84,000 in the last year. This is 11 months. I started this tax day in the United States, tax day, last year. Here we are 1 month away from that. I've made a pretty nice little dent here. Now, the goal on this account right here, when I started it, the goal for 1 month of profit is to turn this into 50K per month. That, not there yet. Well, I didn't expect to get there in a year. I actually, when I started this, I was like, might take me 5 years. I've actually made pretty significant headway right there, getting to the goal, and keep growing it pretty consistently. So if you want to see, does your profit and loss look like this in the last month? How about the last 3 months? How about the last year? These are all verified. Like, these are real trades in a real account. Don't hide anything. Profitable for last month, profitable for the last 3 months, profitable for last year. All 3 stars. So make sure whoever you're following posts their trades publicly and shows you what they're doing. I don't hide anything. It's all here. You go join K-Info. And somebody was saying, well, you have it all hidden. And I'm not sure what happens if I click on the settings. It might show off my email address. But I don't hide anything. Hey, give me a second. Let me check it. It does show off my email address. There we go. So it's public and on the leaderboard. I don't hide anything. Well, I hide open positions, but that's because K-Info has it all screwed up. There's no trades hidden. I don't even qualify because I don't pay for the plus. It says I have open calls and puts from last year, which is impossible. They expired. So their open positions thing is messed up. I don't even know. I've reported it and they said, no, it's working fine. I'm like, how can it be working fine if I still have puts open from December? I don't know. You tell me. Anyway, the profit is all closed trades though. So right there, you can see the trades I did on Friday. Now, these are spread trades, SPX and SPX. Sold that one, bought that one, made 40 bucks. Sold that one, bought that one, made like 900 something bucks. Pretty nice. 800 bucks, 900 bucks. Anyway, all in all, look at the profit loss the last month. Nice little uptrend. About $16,000. S&P, jumping in, checking it out. Finding support at the roadmap line. They're talking about Hardnett talking about 6,600. I think that's pretty tight. I don't think the panic level sits in until deeper. Could easily come back down here pretty quickly. We've got some events coming up this week. Most notably, on Wednesday, the big show. Right there. Before that, we had the VIX OPEX. Last day to trade is on Tuesday, tomorrow. If you've got March VIX that expires this week, they expire Wednesday at the market open. Wednesday afternoon, we get the FOMC. Almost too perfect. Thursday, last day to trade AM expiring index options. And then Friday, we're going to have like I'm going to guess it's going to be like a 1.7 or $1.8 trillion OPEX. It's probably going to be between, I'm going to guess between 1.5 and $1.8 trillion of notional options value expiring off on Friday. First quarter, 2026, end of the quarter, triple witching, whatever you call it. End of the quarter, end of the month, end of the week. Got the AM options and the PM options and all the stuff expiring right there. Fireworks is usually what that brings. Now, most big pro traders will handle their business before Wednesday. And this is where it gets really particularly interesting, because most of the big traders move their positions that are positioned monthly or quarterly by Wednesday before the big OPEX. But we have this monkey wrench thrown in the business here. This is going to be a particularly interesting week. And historically, we get this big spike right here. Now, I've seen lots of people doing math on this. Everybody's kind of a blip. Everybody I see doing the math on, we usually bought on the 12th. Sometimes we bought on the 16th. Historically, we blah, 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 blah. It's because, I don't know if anybody's noticed this, but the 2nd of March is never on the same day of the week. This OPEX week is never exactly in the same place. These days shift around. Look at it. Look at the OPEX here. Look. 14, 15, 16, 17, 18, 19, 20, 17, 18, 19, 20, because February has 28 days. 14, 15, 16, 17. Look at this one. Look at this all screwed up, weird thing here. See how that one does? So when the calendar shifts around, it causes this OPEX to shift around. And that's why the volatility seems to not line up exactly on a day of March. That makes sense. But it's because of that big OPEX. That's what this is. That's what lines up. Everybody tells you it's a specific day. It's not a specific day. It's not a specific number day. It's a specific event that occurs right here. And we have it all lined up in 1 week right here. Sometimes we get it all split up, like in July. Sometimes this happens in March, where we get the VIX OPEX decoupled from the main OPEX. Sometimes we get it all clumped together like we have right now. Sometimes we get it broken up like this one in May. So be careful this week. And then the big, just for giggles, we're throwing in the FOMC. And it's just like crap planning. Or maybe perfect storm. So I expect some volatility this week. Volatility can be up or down. It doesn't have to be down. Most of the time when people talk about volatility, they mean down. When I talk about volatility, it can be up or down. But VIX, just remember, VIX doesn't price in the up. It only really responds to the down. So we got some chaos setting up. S&P on support. NASDAQ on support, but we need to pop lower low before we can go higher. And look at this bleed down. Like, I think we could possibly even make it all the way down here. And this could get This could mess with people. See, typically we make that big bottom in March and we rally to Memorial Day. And typically that's what the market does. We typically make a bottom somewhere in mid-March and then we rally. From there, we're generally rallying up to May. Memorial Day, then it's sell in May and go away. And June and July tend to kind of be a little bit chill. And then traders come back and ramp up the volatility in October. We rally into the Santa rally Christmas. Then we do it all over again. Just kind of the yearly cycle. Now, throw in a potential crisis and who knows where the wheels might come off this train. So look at the S&P's futures overnight. We started out down here on the reopen, a lower low, and we've come back up, making a three-wave move higher. Might top out in this zone right here and get continuation lower. So look for something in the 67.24 to 67.44 area on ES futures. Futures right here. That's the S&P 500 futures. If you're trying to look at the SPX, look, we didn't open last night. We opened just a minute ago. Missing data. That's why I look at the futures. They opened last night. Dipped down, rallied up. Potential to top out right in here and take a turn down. So just be careful. This is kind of set up to get everybody. NASDAQ has the same sort of situation going on their futures. We opened up lower, rallied up, three-wave rally off that low. We could rally up into the 24.7, 24.8, and then take another spill. Russell. Now this has got a little bit different pattern going on. Now there is a three-wave thing going on, yes, but we bottomed at this 618 zone, and that low, that high, this low can set us up for a bigger pop in Russell. So watch out for this three-wave resistance. If we start pushing through it, getting back above 25.50, it's probably the indication we're coming on up here. If we turn down at 25.50, probably setting up to go lower again. Long and the short of it. Oil, absolute chaotic hot mess. This could spike to 150, easy enough. Geopolitical drama. First move down, retrace to a 618. So keep an eye on this right here. We may take a swift spill back down to the roadmap line. Preliminary all clear, and then we take off again. This is going to be probably see news stories talking about trading like Bitcoin or crypto. If we pop down there and then take off. Gold still looking like it's going to be on this path right here. We got this first move down. We got this retrace. Potential to come down here. Something like that. Still working down the path. Now, a break back above that high changes the game a little bit, and I'll revise the path. But right now, that's the primary expectation. Back down to the 4,000 area, or 4,400, maybe as low as 4,000 on gold. Bitcoin coming up to the target. Coming on up, coming on up. And let's see. There's potential that that was the whole big A move. This A right here. So this one I put right here. There's potential that that three-wave move into that high was it. That potentially was the A right there. We just came up shy of the bubble. Then we retraced pretty much to a 618. Now we're rallying up. And kind of a three-wavy move, but that move up, potential to retrace right there. Could put the next move right up in here, possibly even up here, bounce down, and the final push right up in there. And that, my friends, would pan the chart over, was the target right there. So this could be accelerated. We could bring this over here, and we could actually be topping out in that C. You know, this B that I thought might happen in April may have happened right there. Time is the hardest part of this whole shenanigans, all this market price action. So we can see that thing pop right up in there. That could happen possibly instead of out in May or June, maybe it happens in April, May. And then we start down to the lows. The lows, just a reminder, probably going down to the 30 to 50,000 area. And this could happen a little faster if we get up there faster. Still on the path. Nothing really changed. Just maybe a little accelerated on the timeline. See what plays out. Ethereum. Yeah. Sloppy. It's really, really sloppy here. Resistance up here at 27. Dollar. Getting a little reprieve today so far. We touched 100. Like Hartnett says, that's like a magic level here. Up here in the 100, 105. Now, if we go above 102, that short dollar trade that was all the rage on Wall Street last year, probably going to stop out in mass and cause a short squeeze. And that could create a temporary problem where we see the dollar shoot up way up here. That's where we could get up to 120, 130, maybe even 140 on the dollar index. NKD still working on popping in this. So first move down right here. First move down. Probably doing a second wave. You know, this maybe a 1, maybe a 2, maybe an A, maybe a B. Still working on it, set up its first two moves. And then third move tells us if it's a 3 or a C. If we stop in here, probably a C. If we stop down here, maybe a 3. We'll see what happens. Apple trying to hold on to that prior high. Trying. If we get below this low, probably taking a spill down here. Amazon. First move up, retrace. Second move up, retrace. Need to hit the roadmap line, break through to go higher, back to the highs. Google, probably still gunning for this downside target at the roadmap line. Meta, uh-oh. Not good to see that right there. Warning sign. If that's all it does, it's okay. We start getting below that, below this trend line, we start making any more headway to the downside, we're going to come down here and make a lower low and reset this thing before we can make some progress to the higher side. Now, the concern here at this point This was kind of sloppy. This was kind of sloppy into a 618. And if we start breaking down, we're going to come down probably in this 550 area before we can make our bottom, and then head up to 1100 to 1300. Starting to be kind of a head and shoulders situation showing up in there. It's the warning signs that it might not work yet. We might not have the bottom in place yet. Microsoft also kind of warning that the downside is not complete and we may come on down lower low. Nvidia still chopping in the zone. The more it softens up this roadmap line support, the bigger the chances are we're going to come down and retest the breakout support from back here in 2024, excuse me. 2024, coming in 25, we made these highs right here. And we haven't really back tested them. So we may come back to that 150, 155 zone, back test those right in here. Salah. What an interesting story shaping up here. If you're not up on current events, they got approved. Not really they announced. They got approved to convert their $2 billion stake or whatever billion-dollar stake. I think it was $2 billion stake in XAI into the report I read said early valuation SpaceX. Shares. These won't be publicly listed shares. These will be privately held shares. So these shares that they have, $2 billion worth into SpaceX, won't count in the public $50 billion or whatever of shares they're trying to sell later, that SpaceX is trying to sell when they go public. Now, I think this also starts monkeying with the value of Tesla so that they can absorb it. I still think that's the plan. They're talking about rolling out compute at all of their charging stations. So we got like 7 gigawatts or 7 terawatts. I think it was terawatts of power sitting idle at all our charging stations. And we can use that 7 terawatts of power to roll out AI 4 based compute. So look at that big distributed data center. And they're also talking about deploying that out to all the cars. They've got roughly 2 million AI 4 cars on the road that could run compute while they're just sitting idle. They sit idle an average 80% of the time. That's a lot of compute that could be out there. They're talking about chipping in, giving owners a little cut of the action if they do that. It's an interesting situation brewing there. Chart-wise, we're still grinding the bottom side of this resistance. Still have the opportunity and potential to drop down to 370. Test that support. If we can break through this downtrend of highs, which keeps pushing lower, by the way. If we can break through it, set the odds that we're going up to 500, 550. Oops, missed the 50, 550. And kind of overly optimistic, maybe even 600 plus. Now, I speculate that we go up there, make a crazy high, and then we come all the way back down to like 200 again. And if we do that, that's the opportunity that Tesla rolls into SpaceX. Crazy. Netflix. We retraced off of that roadmap line hit. Coming back up. Do we test it or do we make the bigger gap fill down here? Test this 618 before we can bust up through. I don't know. There's probably some softness until we can get above this high. I would expect more downside. My primary expectation would be for this to do a retrace back down in this vicinity, somewhere attempting a gap fill before we go higher. Next resistance up right up there at 108 on Netflix. KRU, 3X Korea, showing up on the poppers list. I go pull gainers. Things moving $2 more up in the pre-market. Things moving down $2 more in the pre-market. Put them on the decliners list, and we hunt for opportunity here. So this is Korea, EWY. Make it all pop, but so this still has potential to come up in here, but it still has more potential to come down here. I feel like it'd be very detrimental to KRU. So KRU is probably going to be very volatile. If EWY takes that spill to the roadmap line, we could see this back down to 100 from the highs up here at 600. This is very dangerous to play right now with the 3x leverage on Korea. ASML probably coming back to the roadmap line after hitting these lofty targets. Lumentum probably coming back to the roadmap line at some point. SanDisk probably coming back to the roadmap line at some point. MU, all these being crazy here. So crazy keeps being crazier, just like the .com bubble. Leverage on MU, NBIS coming up. That was the activation target, 155 right there. If you don't have a piece, that was we activated it last Thursday, Friday, Wednesday. Yeah, activated on Wednesday. Could have gotten a piece on Thursday. Confirmed on Friday. And here we are on Monday, going for the target at 155. GE Veranova, probably coming back for another bounce. STX. First move down, retrace. Be careful, this can take a bigger spill. Right down in the 250, 270 area. Caterpillar, come on down, 590. PGT, sitting on the roadmap line. WDC, first move down, retrace. Next move down will be 180. Can it keep ripping? Sure. Like all these data center plays, MU, SanDisk, ASML, Lumentum, Seagate, all of it can just keep ripping and being irrational, but just be careful. Coherent, potential to come back to the roadmap line. I'm staying off of stuff that's ridiculously high. AMAT potentially topped out 400 there. Watch for the retrace back down, retest the breakout. CIEN, watch for the retrace. NSA, that was a crazy pop. This might be played out. Watch for dropping back below 36 because that may put it back to a lower low. Still a downtrend. It's potential to be done on the downside, but still a downtrend. Intuit, potential to be done on the downside. Got to get through the daily roadmap line to prove it. The upside potential, can't really chart it till we get some sort of move up, retrace, and set this up. AppLovin was green, turning red, bounced off the roadmap line. Coinbase, probably going to go up and retrace to the roadmap line. Circa, Ultra Circle, CRCL. I was like, Circle looks like we might leave the roadmap line. Like this could be the bottom right here. That could have been the lowest low on the correction. And we have no retrace so far. So we're just one big move up. Some point up here we'll retrace, establish a low, and then we can project some highs. Right now there's nothing. It's just a pop off the low. Doesn't tell us anything. Everything to the left of the lowest low doesn't really matter for going higher. Now, Circle could find some resistance at any of these prior highs, but LRCX probably going to reach back to the roadmap line. SPXL, leveraged S&P. This is probably not going to turn higher until the S&P gets done with its correction. And PPLT took a big dip. PA, I got an alert on PALL. Look at that. Basically touched. Not all the way. Well, maybe. Let's see. Zoom her up. Nope. Missed just barely. Triggered all my alerts that I had on Friday. This could be it. That could have been close enough. This could go ripping. This might outperform all the other metals. The chart, such a beautiful setup here. Pop up, retrace back to the roadmap line, and shoot up higher. Targets up here. Now, if we start breaking down though, it's all over but the crying. Bloom Energy, finding resistance at the target. Watch for retrace. MVT. That high, that low. 126 next upside. Hilton worldwide. Freaking Catalina mixer. Probably want to see this hit the roadmap line. Prestige worldwide. And there's the high, there's the low. Look for this to come back up through 120 to get 137. And emerging markets, 3x leverage. Here's the high, here's the low. If we can get back through 71, we could be 88 higher. CEG. We're at a kind of a flip point. We may come on down lower. We may go up to the targets. Close above 340 is going to tell us which way. VRT. Look at all played out. Be careful. Watch for the retrace. Royal Caribbean. Probably going to come down here. And spot check a few more. Carvana. No bottom confirmed. LU. Probably needs a little lower. ALB. Holding on to that support really well right there. We busted up through and now it's turning into support. If we can hold on to it and pop higher, we could be looking at a big pop up here. It's one of the lithium producers in the United States. Urgently, looks like it's urgently going to zero. So I gotta, it does. Reverse split, that's a dumpster fire right there. Be careful. I wouldn't touch it. Danger, danger, danger. Restoration hardware. Failed. Coming down, lower low. Bummer. MDB. Probably gonna, we've been in this kind of like bounce up here, retrace, bounce up here, retrace, bounce up here, retrace. Like that's probably the MDB path for the foreseeable future. ANET potential drop down here. We did trigger the upside though, 173. CRDO. And yeah, just RMBS. ARM probably coming on down. Baidu, potential to bounce off the roadmap line. Let's check out BABA. Oh, BABA. Wow, perfect target hits. TECHY. Nope. I can't ever remember 10 cents. TCEHY. Here's the high. Here's the potential low. That move, that move. Yeah, potential to be done on the downside right here on 10 cents. K-Web. It's China Internet from Kane Shares, C-Web. Direction. This has got 2x leverage to it. Leverage cuts both ways. FXIs, iShares. Reasonable bottom might be in place. Let's see. Hood. Look for this to turn and burn here. Bottom in place, potential. Oracle probably needs to reach on down, retest the low from April last year. XLK sitting on the roadmap line. Has this big pullback back here that just hasn't done anything so far. Get that high, get that low, and we've just been cooking. So that wasn't a roadmap bounce, so. But this potentially is right here. But we're not getting above the 618. So 152 if we do. That 618 sitting at 144. XLK. Stuff pulled back, PSA. Usually where you find more opportunities. That's kind of a downtrend. Not sure I like that, but here's the high, here's the low. Bounce up, 316. CF Industries, watch. We hit target on the upside. Watch for the retrace. Could it extend? Sure. 140, 170. PX looks pretty bad. NTR. Roadmap line retrace. UVX. Leverage, leverage, leverage. Leverage, leverage. Lots of leverage stuff on the list today. And that one's even leverage. Two setups. ACHO. Achoo. It says it AHCO. There's the high. There's the low. 1132 target. This is low price stuff. Be careful. Statistics on this one don't mean anything. SWKH. And golly, I knew that was coming. There's the entry right there. And 1788, 1258. And no good on statistics either way. That was only the two out of like almost 4,000 tickers I hunt for every day that were set up for an entry potential today. SPY. Let's go look at the tea leaves of the market. See what we can figure out for today. Where might we end up? Big OPEX week this week, quarterly. Let's look at bullflow.io. See if we can figure out anything. Cooking, good looking. SPY. Let's see what we got here. Bullflow, pretty darn nice bubble. Now, I talk about the bubble all the time. This is what I'm looking for. This nice, solid stack of levels. Down to 668, up to 677. So we may stack that in today. 668. Right up here. Nice tight grouping today. 668 and 677. Let's go with 677. That's the bubble today. Kind of tight. Let's see. Biggest level right now hanging out at 570. 675. Right near the top. This is the biggest bubble level. Subject to change as the day goes on. We have this big show sitting out here for Friday. Down at 660. $1.3 billion. Like I said, we're going to have a big OPEX this week. 400, almost $500 million up here. 200 million. 200 million. 1.3 billion. 120 million. 140 million. 100 million. 300 million. 150 million, 430 million, 100 million, 100 million, 100 million, 600 million, 200 million. Like, we're stacked to the downside for later this week. So, FOMC chaos, you tell me. That's what it looks like. Not going to do anything through the OPEX, the fix OPEX tomorrow probably. Just going to chill out. So on here, balancing out the puts and the calls, something like 669. $669 right down here. So we've got that. Looks like a pin for today, or at least a magnet for today. We've got this down here, and then we've got this giant 660 level down here out to the Friday OPEX. Dun, 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 dun. Did I put a vertical out here? No, I did not. So that's the SPY levels. Like, I expect it to hang out in the box today with the beautiful bubble formed on the SPY. And QQQ. Check out the levels here. Move this over. Grab the heat map. Nice bubble there too. So 599, 607. Very clear. If we get out of the box, chaos can ensue, but 599, 607, pretty darn stacked in there. Nice bubble. Tend to hang out there when we got one. Again, the big level down here, 400 million, but these are not billion-dollar levels, so there's not nearly the downside playing that there is on SPY for this Friday. Levels looks like right around 600 million to balance it out. 600 million, I mean 600, excuse me, not 600 million, 600 strike price. So that kind of balances it out. We could see pushing up to maybe a 606, but may just hang out with the roadmap line there today. Anyway, that's the long and the short of it. As far as the futures, kind of give you that path already. Look for that to top out up here, maybe take a spill. Look for NQ to top out up here and maybe take a spill. And maybe just retrace to the roadmap line. You can see this pop up and come back down. That would fit with the Qs. See this top out now and get a retrace. But probably going to be muted price action through FOMC on Wednesday. So be careful out there. The account you save may be your own. I'll be on Market Masters at 11:30, and I'll be back here, same bat time, same bat channel, 9:15 tomorrow morning. We'll hunt for opportunity again. Try to figure out what the devil the market's going to do. Have a great